Most people who try trading quit within their first month. They quit because they measure their early progress using the worst possible metric for a beginner, their profit and loss statement. If you approach the market treating it like a trip to the casino, pulling levers and hoping for a payout, you guarantee your own frustration. To survive, you have to treat trading like learning to operate a complex vehicle. You start by understanding the dashboard, the steering, and the safety mechanisms before you ever merge onto the highway. This brings us to the strict ground rule for your first 90 days. Looking at this timeline, a new trader typically expects to see a steady increase in earning, but expecting a financial return while you are still learning how to steer is backwards. For these first 3 months, the expectation of earning must be replaced entirely by learning. As this checklist shows, your progress is measured by your ability to define the terminology, navigate your trading platforms, execute cleanly in a demo account, and stick to your trading plan. Prioritizing those specific skills over making a quick dollar gives you a controlled environment. You build the reflexes necessary to manage risk without blowing up your starting capital. Once you place demo trades, you hit the highest friction point for beginners, separating financial loss from failure. The market is inherently unpredictable. This decision tree maps a trade. Top path, you followed the plan, but the market reversed for a loss. This is a successful learning experience. Bottom path, you broke your rules for the same loss. That is a genuine mistake. Accepting process-based losses becomes difficult when you go online. This comparative chart breaks down the reality of social media. You only see the visible 1%, the payouts, and the luxury. You are shielded from the hidden 99% underneath, the blown accounts, the deep losing streaks, and the years of practice required. Measuring your day one against someone else's curated highlight reel leads directly to emotional, erratic decisions. Comparing your execution solely to your own performance from yesterday maintains your objective focus. Since we are removing your bank balance as a metric for success right now, we have to replace it with something tangible. This digital checklist shows exactly how you track progress. You look for specific, daily process metrics. Setting up a demo trade correctly is a win. Using your stop loss is a win. Completing a week of journal entries is a win. Let's test this framework. Look at the split screen table. Trader A ignored their plan and made $500. Trader B followed the rules and lost $20. Who was successful? Trader B. Trader A's recklessness guarantees a wipeout. Trader B's discipline ensures survival. Strict adherence to a repeatable process keeps you in the game long enough to let probabilities work in your favor. Relying on random, outcome-driven luck ensures you will eventually run out of capital. To solidify this shift in perspective, it is time for a practical exercise. In your workbook, you will create a physical 90-day trading commitment. Do not write down a dollar amount. Write down the process-based habits you will adhere to, like committing to journal every single demo trade you execute over the next 3 months. Keep this list in mind as you build your commitment. Prioritize skill over a shortcut. Focus entirely on learning rather than earning. Remember that a loss does not equal a failure. Compare yourself only to your execution from yesterday and track your progress through process-driven wins. As those rules transform into a solid foundation block, notice the long-term trend line growing out of it. The market will be here tomorrow, next month, and next year. Taking the time to properly condition your habits on a demo account protects your real capital until you actually know how to deploy it. Mastery in trading is found in the relentless, systemic execution of boring, disciplined habits. Put in the reps, follow your rules,